guys. This is the fourth podcast of Stock Picking Insights, and today we will talk about share buybacks. Are they good or are they bad? Share buybacks are a huge part of today's markets, and they are strange to think about from a private company standpoint. Let's say I have a private company with two partners. Even if I bought the ownership of my two partners to own 100% of the company, how would that create value for the company? I'm not selling more things, I'm not changing my business model, anything. Yet in public markets, the dynamic is different. We already know what Warren Buffett says about it, and this is from Berkshire Hathaway letter 2019. All of our major holdings enjoy excellent economics, and most use a portion of their earnings to repurchase their shares. We very much like that. If Charlie and I think an investee stock is underpriced, we rejoice when management employs some of its earnings to increase Berkshire's ownership percentage. So, what he's saying is that if a public company buys its own stock below intrinsic value, it's good, and the opposite is bad. So we will now take a look at two case studies. The first one is Colgate-Palmolive. And in the written post that you can find in stockpickinginsights.com, you will see a graph. That graph contains the last 15 years of stock buybacks. And you will see that Colgate bought back stock every year, and it was not a constant stream of buybacks. They bought more stock in the crisis years, and that was 2010, 11, and 12. The next graph is EV to EBIT, and you will see that over the last 15 years it changed a whole lot, and the minimum values were 10 times, and those happened in the financial crisis. So 2009, then it went up a bit in 2010, then it went down again to 10 times in 2011, and then it ramped up until today, and today trades at about 20 times. From these two graphs, we can see that Colgate Palmolive bought the most stock when their EV to EBIT prices were the lowest, and that was around the financial crisis. That's a good thing. Although we should raise a flag due to the fact that they bought stock every year, um, and that is subjective, of course. But do you really think that Colgate Palmolive stock was underpriced every year? Only you can decide. Now we will take a look at another case of a public company, and that is Nike. We will also look at stock buybacks over the last 15 years. And if you take a look at the graph that you see in the written post, you will see that stock buybacks were like a mountain. So they increased stock buybacks almost every year up until the current years. And if you take a look at EV to EBIT, you will also see something that resembles a hill, not so much a mountain, but a hill. So EV to EBIT 15 years ago was at 10 times, and that it climbed over time up to the 20s to 30s, and that was until 2020. And then the coronavirus hit, and EV to EBIT jumped to crazy levels, but that's not the most important part. The most important part is that um, do you think it is a good management move to buy back more stock when EV to EBIT increases over time? Um, that that answer may be yes, because Nike stock may be Nike as a company may be very different from what it was 15 years ago, and that's up to you to decide because you make your analysis. But it should definitely raise a flag to every investor, um, this kind of behavior. It should also be noted that um, since 2018, so the last 3 years, they have been spending over 100% of their net profits, net income, buying back stock. And that doesn't look good to me. Let's now wrap up with the final thoughts. There is not a rule for every company, but we should have trigger points for some behaviors. Um, and that's for every company. Ideally, I would love to see occasional repurchases, not every year, because I don't think that a company's stock is undervalued every year. And I would also love to see repurchases slowing down at increasingly higher multiples. So if EV to EBIT goes increasingly higher, stock repurchases should go increasingly lower, with some exceptions, of course. But this is a rule of thumb, and we would love to see the case for each company. Share buybacks typically nudge the stock price up because buyers interpret as the company telling the world, we think that our stock is undervalued, but many companies just do it chronically. If you enjoy this content, make sure to subscribe. You can do that by going to stockpickinginsights.com, the website. You will there find the written version of these podcasts, and we'll see you next week.